Hi, everyone, and welcome to Earnings Cheat Sheet for Friday, February 21st. It's Alissa Coram here in for Alexis Garcia this week and joined by Ed Carson. Ed, great to see you.
Great to see you.
All right, and we're going to preview a couple of the key upcoming earnings reports for the week ahead. And wow, even though earnings season winding down, there's a couple of big ones. One in particular that's really big next week, Ed.
Yeah, the big one is Nvidia. So important to see for not just for Nvidia, but for the whole market. I also want to take a look at Axon Enterprise and Cava.
Okay, two other interesting names that we will check in on as well. So we will kick things off with Nvidia, the AI chip giant. Lots of eyes focused on this report coming up on Wednesday, February 26th, where earnings are expected to rise 62% to 84 cents a share. Revenue expected to climb 72% to just shy of $38 billion, Ed. And you said it, the market, this could be key because Nvidia has a big weighting in the indexes. What they say about where they're at with the AI chip spending and how everything is, shaping up with that fallout of DeepSeek could have ripple effects across the market.
Yeah, absolutely. People are really interested in about the earnings will be important, but especially now the outlook, and it's all going to be about Blackwell, and obviously a lot of other things. Blackwell about the production line. Are customers, were they pausing chips, buys of the older Hopper line before stepping in? What is the commentary on DeepSeek? What is the commentary maybe on custom AI chips? Because those are things that are competing with NVIDIA's chips. Just get a sense of, is the demand, is the pricing going to remain really firm for the future going forward? And yeah, people have been waiting for it. NVIDIA's basically been pausing for like 8 months or so, as they're wondering, does Nvidia have another bit of a leg? So huge earnings report for the market.
Yeah, Blackwell, DeepSeek, definitely two areas of focus, as you mentioned. And we know that NVIDIA is a big player in this AI infrastructure rollout. And we really saw a shift in the leadership in the AI space in late January when that DeepSeek news came out. So perhaps a lot of other chip stocks and other AI infrastructure names could swing in sympathy with this report, and expectations are probably pretty high here.
They're probably pretty high. I can imagine big swings either way, and it could be whipsaw because it could be your interpretation of events. And yeah, it's been a big change in leadership, not just among chips. It's also like, well, if AI is really cheap, maybe it should be the software names that do well. So there's a lot of things, and we saw from that big DeepSeek sell-off, there's a lot of stocks that move on AI that you wouldn't think are traditionally AI, as we're well aware from that day. There's so much that could move off of this.
All right. Well, let's check out the chart and see how investors should be interpreting potential upside and downside moves here. So, heading into the report, Nvidia, as of now, is back above the 50-day line after that big hit DeepSeek day that it took on January 27th, where it plunged some 17% massive volume, of course, down to the 200-day line. Only spent a little bit of time below there. But even with this rally into earnings, this is not, if you cover up the ticker, this is not the most beautiful chart setup we've ever seen.
No, no.
Earnings could change that, but I think there's a little bit of apprehension here from some traders who are very focused on the chart action. What are your thoughts?
Yeah, technically this is a base from 153. I mean, it's a really ugly base, but it's there. There's a downward sloping trend line as well. Yeah, I guess there's a double bottom or just as a base, however you want to interpret it. I guess in theory, if it got above Tuesday's high, that could be a buy signal, but right ahead of earnings seems a little nuts, how much, given all that. Also say like there's massive volume on that sell-off. Okay, sure. There just also hasn't been much volume on the upside really for a long time. I mean, honestly, that's why the AD rating is an E. The up-down volume 0.9. It's gone sideways for about 8 months. It's at a key area. This 140 area has been a tough spot, and whenever it gets above 150, it's really sold off. So there's some real technical areas here that it needs to get above. As I say, it is technically in a base, but it's hard to feel too comfortable about that. I mean,
Mhm.
but it could trigger some buy signals if it goes there. And also, if it sells off, that maybe people really start giving up on it because it's been holding it for a while. If that relative strength line doesn't just sort of go sideways. I mean, for all the talk about, oh, it hasn't gone anywhere, well, it hasn't really fallen apart either. So I think it's a lot could really happen, or they got people, a lot of people, or a lot of institutions are still in it. Will those institutions really start selling it off if things
Mhm.
don't go out well?
Yeah, I mean, I think the upward progress over the last couple of weeks does put it in a position where if it has a positive reaction and can hold that, it would look buyable versus if it was heading into the report below that 40-week line, the black line on the chart,
Yeah.
that would, that might look a little funky. So at least it has set up in this base here, as you mentioned, but those levels that you pointed out, totally agree, Ed. 140 is a key level here, as well as the 150 area or so. So those are kind of the levels on the upside to watch there. And then on the downside, can it hold the 50-day? As of this moment, when we're recording this show, it's about 4.5% or so above the 50-day line, 12% above the 200-day line. So on the downside, I would definitely be keeping an eye on the 200-day line. Can it get support around that level as well? And, another round number on the downside, 120. And then, of course, the recent low at 113. If it breaks that, that definitely would not look good. So who knows? Maybe that's an edge case. We'll have to see what kind of move the options market is pricing in. That's another thing that we talk about that's important for investors to consider, the potential upside or downside move here, and to adjust accordingly if you've been in this stock for a while or if you're a recent buyer. I exited my position a couple of weeks ago, so I've got my popcorn ready for the earnings report.
Yeah, that might be the best way to go, but it's at least to keep your heart rate down a little bit for that evening. But yeah, it'll be really, really a lot of something to watch.
All right, so the next stock on our list, Ed, let's pivot over to Axon, which is showing some interesting action lately. But we've got the earnings report coming up on Tuesday, February 25th. Earnings are expected to rise 25% here to $1.40 per share. Revenue is seen climbing 31% to $567 million. So pretty solid double-digit growth expected on the top and bottom lines. And so, Axon, I know, Ed, this is something that you have brought up on IBD Live, how they're getting into AI products. So that seems like one area of interest for what we're watching for this report.
Yeah, like AI to help police write up their reports, or at least start the reports. We'll see how much they might, if they just turn it all in, and other things like there's net revenue retention. They've had really good things. Like their revenue is very strong coming in. Like customers order more, so that's like over 100% revenue retention. So it's really good. International deals, the federal spending outlook. You just don't know if there might be some issues with, as Elon Musk and Doge, and trying to think of like cutting out various payments or not. I mean, it's unclear. And now there's concerns about, an analyst brought up on February 19th, concerns about a recent partnership dissolving that had been formed for a few years, and there was really helped Taser with moving into law enforcement. Maybe Taser feels it doesn't need that anymore, but that could be a concern. So I'm sure that it's going to be all of a sudden vaulting to the top of what people want to hear about is, oh, how are you going to handle without this partnership?
Absolutely. Yeah. Especially after the stock action in reaction to that analyst chatter out there. So, makes the chart all the more interesting to analyze. Ed, so speaking of, let's take a look at Axon heading into this report. It was setting up in a cup with handle base and really got hit hard on that news that you mentioned from that analyst. Surprisingly hard.
Surprisingly hard. And the news it was out there. So I don't know why. Maybe people just really weren't aware of it. But I don't think it was a secret. But really hard. This is sort of like somebody who's like, an Olympic diver who just does the spin, looks beautiful because the base looked great. The breakout looked perfect. I mean, especially given the choppy market, everything was looking so classic. And it's just basically belly flopping. This is a huge expectations breaker. It's now well below the sell signal. So whatever measure you would use if you were buying on this breakout or not, like this was triggering a pretty clear sell signal to stay. Now, could it set up again?
Mhm.
Maybe you could say, oh no, if you could put your thumb on it. If they come back with earnings, say, no, everything's fine. And people say, well, maybe, I'm not saying you couldn't, but this also has the risk of really falling apart. I mean, this had made a nice strong run from after the last couple of earnings reports,
Mhm.
really made a big move over the last that. So you can see how much, that doesn't mean it has to happen again. It could be that the expectations were pretty high heading into this. That may be one reason why the analyst downgrade had such an impact, because people were so bullish on things, they just didn't think that there could be anything negative. But now it's come all the way to the 10-week line, 50-day line very quickly. So now the danger is that it falls apart. Now it's almost like longer term holders are going to have to start just thinking about things. What do I want to do heading into earnings? I don't think that people who recently bought, they should probably be, barring some, dramatic, recovery, should be thinking, to be exiting the position and just waiting to see if there's another opportunity.
Totally agree. Outside week, downside reversal, a pickup in volume here. And, if you look at the intraday charges continuing to make low after low after low, at least as of this point without any support. But we do have a couple of trading sessions before the earnings report hits. So I think those next couple of days are going to be key for this stock. Does this selling continue, or can it find its footing? That'll be really important. Like you said, for those who maybe have been in this stock for a couple of quarters and are trying to decide, hey, can I get any more juice out of this?
Yeah, and that's just a question everybody has to make depending on your conviction and everything, but pretty clear negative sign in the very, very short term.
Absolutely. Okay, well, let's move on to something perhaps a little tastier, or will this report leave a bad taste in investors' mouths? And that is Cava, a restaurant stock that is closely followed by a lot of growth investors. It's also, like Axon reporting on Tuesday, February 25th, the Mediterranean fast casual food chain, as we know. Earnings are expected to be in the triple digits here, up 250% to 7 cents a share. Revenue expected to rise 26% to $223.3 million. Ed, some growth investors have said, hey, maybe this is the next Chipotle-esque restaurant growth story out there. But we'll have to see what this report is like. It has had a couple of quarters already of triple digit earnings growth. Again, from a low base there, of course, and solid double digit top line growth here. What are your thoughts on what investors should be watching in this report?
Yeah, beyond obviously the earnings and the same store sales and the guidance on those headline figures, things like new restaurant openings and plans for openings. Because look, one reason restaurants got really strong to start, because there's only so much growth you can get in the existing restaurant. There's like you can get 10% same store sales growth maybe if things are really hot. But the reason why you can get these amazing growth is because of the openings that come in and just rippling. So there does seem like there could be a big runway for a lot more growth. And so you want to see that. I think that would be the real positive on that. And also just things like menu price changes and maybe costs that they're facing. I suppose, I don't know how much they might be affected by possible tariffs. If there was tariffs against Mexico, some of the ingredients that they get. But those are things that when people look at, want to see signs that fundamental growth story beyond just serving up some good food can really continue.
Absolutely. This stock has had a couple of stumbling blocks lately. And speaking of a bad taste in the mouth, last quarter, I've got to say, did that for me, Ed. It was an outstanding initial reaction, but a terrible fade by the close. And then the stock really got hit from there. And it looks like it's still trying to find its footing. Maybe this next report can change that. We'll have to see.
Yeah, if you put your thumb over that earnings day, you could have seen up until today sort of a handle forming. I mean, the handle's still sort of, you can still sort of see it, but it's too low. And now it's really too low.
Mhm.
That's an ugly sell-off. And look, the valuation on this is extremely high. So when people, you need really strong growth because ultimately when they become more stable, when people see, okay, they're not really expanding that much, at least as a share of the existing restaurant base, that becomes an issue and they just start slowing down a little bit. So that may be some of the issues. It seems like some other restaurants have come into trouble too, as well. And it just that comes in and out of favor. It has tremendous growth. It has really great ownership, fund ownership. The funds are increasing. The growth is tremendous. So the fundamentals are great. But yeah, the technicals do not look really that good right now. And it looked like it was setting up again, but now it's breaking there. And if you bought when it went above the 50-day line, you're down a fair amount.
Mhm.
Uh, with earnings coming up, and it's not clear now. Maybe if it got above those short-term highs, that might be something, or maybe a trend line or something, that would be out there. But and it can do that, but then you also have to watch out because it does do these sort of things where it can swip around like that whipsaw action on earnings. It could go whipsaw down and then whipsaw back up. So it could do that, but it doesn't look in great position right now. It seems like it's, despite the fact that a lot of growth stocks are working, this one is not. I didn't see any news on it, but not great action.
Yeah, unfortunately, but I think it seems like the best case scenario would be from here for the bleeding to stop. Hopefully, it doesn't undercut that 109 low from a couple of weeks ago and the 200-day line ahead of the report coming up on Tuesday. But then, if we get a positive reaction, first step, let's see if it can hold the gain, right?
Yeah,
Last quarter it was not able to hold the gain. So a closing range of 40% or greater, the higher the better, a strong close. And then let's see if it can form some sort of pattern after that, tighten up. And I think on the upside, like Nvidia 150 a key level, it is for this stock as well.
yeah. I do suppose that if it sold off and went through the 200-day line through the 109, there could be some double bottom situation. But again, you'd really want to see the recovery.
Mhm.
And that's not what current holders would want to hear. But yeah, I think you want to see something set up and not anticipate something setting up. It's not. It's not there right now.
Yeah, you're right. Maybe that shakeout could set up an even better buying opportunity down the road, but it seems like that would need even more time to
Yeah.
develop, something proper or bullish that we like to see with tightening action, rising 50-day line, and a relative strength line in a strong position. So for now, we'll just have to see if investors are in the mood for some Mediterranean, depending on what the results are like, and like you said about the expansion and that kind of thing. So now we want to get into our lightning mode, Ed, right? Of some other companies that we're watching.
Absolutely. Uh,
Okay, so we've got a couple of software names to start with.
yeah. Salesforce and Snowflake. CRM Dow Jones Component. That needs repair. Right? There seem to be better opportunities out there. It's still an important company. I mean, you could do something if it got above the 50-day line, but it doesn't seem to be really leading right now.
Yeah, there's a lot of leadership, as you mentioned, in software with the rotation that we've seen over the last month in the AI space. And this is a big, well known name in the group, but an underperformer. And the last couple of quarters, revenue growth was in the single digits. So,
Yeah.
not your big time grower here, at least as of late. Snowflake, on the other hand, maybe showing a little bit better top line growth. It does look like earnings, let's see what sort of the pattern here on earnings has been lately. A deceleration, though it is profitable. So it'll be interesting to see what the results are like here for Snowflake, which has had a ton of up weeks in a row here at this point.
Yeah, that is one concern is that, it's certainly not shaking people out for that much. It's right in the buy zone, but yeah, you could see a big move. You can see, look at those moves that have been around earnings in the last few quarters. There have been some big declines and then a massive increase. So, you don't need to have the stats. You know that this could move 15, 20% either way. And it just like, you have to be thinking about that going in.
Right. Which is a great reminder that even though a stock is in a buy zone, say it checks off all the boxes, if you have earnings in just a couple of days, there's a big risk there, like you said, especially for a stock that is known to have big swings, just because that's very risky, right? If you're buying right before earnings, you have zero profit cushion. There's just a lot of added risk with that.
Yeah, absolutely.
Okay, so both of these companies are reporting on February 26th. And then coming up on February 27th, another stock that was hit on DeepSeek Day, and that is Vistra, one of the utility AI plays. That is coming up on the 27th, Ed.
Yeah, this is interesting. I mean, I suppose if it get moved above this short-term levels, it could do something there. You could sort of treat this as sort of like, because it sort of tumbled and came back pretty quickly above the 50-day line. It's really, really messy. It's hard to know
Mm-hmm.
how to view this. I mean, this could end up where like, well, it wasn't Vistra's fault. It wasn't like bad news about Vistra, but you could say that about a lot of stocks. And this will also probably be influenced by Nvidia as well. So it's something
Right.
else to consider. That's so this could swing a number of times next week. We already had a rival CEG report this week. Didn't seem to have a big move for Vistra, but CEG moved a little bit back and forth. So we'll see. Vistra was one of the very strongest companies in the S&P 500 last year because of the AI, because of all that power demand and some other
Mhm.
expectations. So can it continue to go on that run? What are those expectations? But that chart it doesn't look terrible, it doesn't look weak, but it looks really, really messy. It's
Mhm.
hard to interpret that.
Yeah, the weekly makes it look a little bit better, but it still is pretty funky.
Yeah.
The spread in a 2 week time going from, 200 to, below 140. That's a really big
Yeah,
spread.
that's crazy.
Yeah. Yeah. 199 down to 132 and change. Okay. Elsewhere, let's take a look at a hot stock lately, and that is Hims and Hers Health. This one isn't waiting for the earnings report to make a big move, Ed. Wow. Taking a look at the last couple of weeks here, it's just been on a tear, and earnings are coming up on February 24th.
Yeah, it could be great. This has been a huge move. There is the potential for disappointment or something. I don't know what's going on. This has been just an amazing run. It's just sort of like, do you want to book some profits or do you want to ride it because you're up? If you bought it at a decent spot, you're up like basically 100% or more. So you certainly have every right to hold it through earnings. It's also, you could always take some profits just because there's the potential this could have an enormous drop given the run. I think people will be very interested in the outlook. Obviously, things like Eli Lilly and Novartis, if the supplies come up, their business could dry up considerably because they're basically selling compounded versions of these things. So I mean, that's always a
Mhm.
concern that kept me away from it. But boy, oh boy, is it doing well, and it has had really good growth. I mean, accelerating growth, just some tremendous things there. So, but really extended.
Yeah. Up as of last week, 85% in 3 weeks' time from a breakout. Very, very impressive. And you mentioned
Yeah.
the strong acceleration here that we're seeing. So I would be curious, in terms of what to watch. Can they have another quarter of accelerating top line growth? And what is the bottom line growth looking like? But you said it, Ed. I was also going to say, I think at first it wasn't clear, going back last year, how much this stock would move in sympathy with Eli Lilly and with Novo Nordisk, since they do have, or I guess, opposite if it's a competitor kind of thing, with some of those weight loss drug makers. But in 2025, this is definitely, and I mean, I guess, going back to the back half, or at least the very last quarter of 2024, this has been the standout sort of in that area. Although they
Absolutely.
do other things, they're not just doing the weight loss drugs; they have other offerings as well. So maybe that has also helped.
That means that help. It'll be interesting to see, like, let's look at that profit growth. And it's like just bolting into profitability, and then it's supposed to be down 2%. So obviously, I think people are expecting some kind of revision up, but there
Mm.
must be like a back half of 2025. People are probably, right now, analysts are expecting declines. So that will be the thing I think people want to be looking at there.
Absolutely. Okay, two more retail related ones. First, in the retail apparel group, we've got TJX reporting on the 26th, and it's setting up in a base.
Setting up in a base, it's done fine. It's just that the relative strength line has sort of gone flat for the past couple of years. And it's just sort of a question, if we're in a risk on environment,
Yeah,
maybe
why
this won't
this?
lead.
Mhm.
Yeah. So this is more of a defensive growth situation. It's done fine. It's got solid growth. It's a grower, but that would be an issue. But if it can
Mhm.
rebound over here, it could certainly go on another run. You know, there's the question: can it really outperform?
Right.
Uh, that would be the question there.
Absolutely. Yeah, because otherwise, why not just buy the S&P 500 if it's only going to keep pace with the market?
Yeah.
Okay, and then we've got Home Depot. This is in the retail wholesale building products group. And we've seen this stock kind of struggling as of late, a slight decline in that RS line over the last couple of years. So underperforming the market.
Yeah, they haven't benefited from some of the home builders have gone on big runs, and this has gone on runs, but not outperforming the market, whereas sometimes the home builders have. The home builders are really struggling now. I think people are interested in see the remodeling and just the home construction thing, maybe tariffs. There's talking of like there's the possibility of big tariffs that could then affect on lumber, other things that could affect Home Depot or just the housing market. So yeah, people are looking at this one, but this one needs repair work. And again, do you want to go with something like this when it just hasn't outperformed for any kind of real length of time in the past 2 or 3 years?
Right. And the recent track record of the fundamentals is
Yeah,
pretty poor. So it doesn't have a lot going for it in terms of its track record either.
absolutely.
All right, Ed. Well, great discussion this week. Thanks for having me on. I hope no one missed Lexi too much. I'm sure the earnings cheat sheet audience did, and she will be back for the next one. So, to my relief.
Well, thank you for doing this with me today.
Yeah, it was fun, Ed. All right, well, that wraps it up for this episode of Earnings Cheat Sheet. And if you want even more market analysis, make sure you tune into our Stock Market Today show that Ed and I co host quite a bit. Of course, we have our other team members that contribute as well. So we will see you there over at Stock Market Today. And then the Earnings Cheat Sheet crew, we'll see you next time. Thanks for joining us, everyone.